Hi, I'm Webb Beagle with KeenOnTheMarket.com and AlphaShark.com, and I'm here to talk to you today about our newest indicator called AlphaTracker and how you can use it to day trade the futures. In particular, these are the S&P mini futures. The lines that you see on the chart here, all you're seeing as far as studies go are the new AlphaTracker indicator. It comes in two forms, the upper study and the lower study. In particular, I want to look at the upper study today, where these lines in here are showing me where there are lines of defensive support. So if they're green, it tells me that buyers stepped in and defended that level, and it tells me how much volume they stepped in with. If they're orange or red, then sellers stepped in and defended that level. Okay, so we see these lines have been created, and we can see the stair-stepping pattern there of the green ones, and we can see this one in particular, this red line here. That means it's the biggest selling defense that has happened, 48,000 contracts there on the close of Thursday of last week. As we come over, I want to particularly focus on this day, which was Tuesday of this week. We can see pre-market, this was around 7:30 a.m. Eastern. Sellers came in and defended this particular line at 2122.50 with 1,300 contracts sold. That's significant enough in the pre-market to be notable to the new indicator. And we sold off from there, rather marked at top. You can see how we bounced off of this red line right here at 9:20 a.m., 10 minutes before the open of the market. And we didn't quite get back to the upper defensive line, but we did bounce. So these lines kind of act as pivot points of support resistance. If we're trading above them, then they're support. If we're trading below them, of course, resistance. If we break them like pivot lines, it's a good short signal. So they can be used if they just become established. They can be used as a short signal, sure. But as we come across here and we're trading above this red line, we can expect a bounce. So if I'm short from here, I take it long there. Or I close my short. I may or may not take it long here. I don't particularly want to take it long here early in the market. But as I see that we broke this line again, and you can see some resistance here for a good 10 minutes, and we finally broke below it. Again, I take a short here now that we've broken below that line with a stop just above the line. And we come down and we touch this green line that has been established well before. And we do a little bit of consolidation, but we break it pretty quick. And you can see how we bounce back to that level. So I may or may not use that as an opportunity to get out of my short, but it's only 4 points at this moment. Not terrible for a trade, but I did stay in it. I did take this short right here when we broke below this level. When I did take it off was right here, which was when I saw buyers step in, and it's bright green, which means it's the largest size of buying defense that has come in. And so I take it off right here at 2108, 2100, actually that's 2109. Sorry, everything's a bit off here. But that's a good point to exit, and you can see how we bounced from there, right? In the Globex, we got back below it, but that's for a different trade. We can see how these are established well in advance. So this was actually, this red line that we broke for the short signal was actually established on looks like Thursday of last week. So it held as a significant line until then. And the green line that we broke that may or may not have been a nice place to take off the short was established on Friday of last week. So it's really interesting how these hold and the market kind of remembers when these are established. Remember how this one, if I zoom back in, we can see again that red line was established on Thursday of last week. We came down and where did we bounce? Right off that line. So the market still remembers that these are coming in. And again, these lines are established when big money comes in and defends a level. And they do that with purpose, and it's really nice, useful levels to maintain going forward for day trading on a 5-minute chart, any of the futures. So that's what I use it for. The lower study, I can talk about further in another video, but the lower study did show some buying pressure here leading into this pop right here, but some selling pressure that led us down into this level until finally that defensive line. So I'm using the lines particularly for trading the futures, and this just for reference as far as, well, maybe it's time to take off my short or maybe it's time to stay in it. So I hope you enjoy it. I think it's very, very interesting. I think it's an extremely powerful indicator. If you're interested in it, check out the link below in the comments, and I wish you all happy trading. Thanks.